Hello, and welcome to the Bankers Tech Talk video series, looking at developments in the global fintech community. I'm Joy Macknight, Deputy and Technology Editor at The Banker, and I'm joined by Daniel Kjellén, the co-founder and CEO of Tink, a Stockholm-based fintech company. Daniel, thanks so much for joining us today.
Thanks for having me.
Can you tell me a little bit about Tink and how you differentiate yourself from other private finance management companies?
So Tink is a technology provider. We offer kind of the building blocks for banks to build the future of financial services. And those are API based and could be ranged from aggregation to payment initiation and advisory. And I think what sets us apart a bit is that all of that technology is also market proven, because we have a consumer division in Sweden, so where we offer consumers the ability to manage her finances across any bank inside the Tink app. We let her pay her bills, help her understand finances, and even let her cherry pick the best financial services. Okay. So that is a standalone business with 500,000 users in Sweden, which is separated then from the Tink technology side. But I think that is one of the reasons why banks like Klarna or Nordea wants to partner with someone who actually have a skin in the game as well.
Okay, and it's very interesting. You talked about open APIs, like application programming interfaces, and obviously there's been a big move, especially since the Payment Services Directive 2 in Europe, but also open banking in the UK both of them are coming in. So, how do you think that's really going to change the banking environment?
I think it's going to move tons of power from banks to consumers. And I think that banks with great offerings or fintechs with great offering, they're going to be picked. So instead of inherit your banks from your parents, I think you're going to get all the customers that you deserve. But I think also that it's a bit dangerous to look at. I think that in the next era of banking services, it all starts with the consumers and ends with the consumer. And PSD2 is not really a driving force in this. So this is something that consumer wants. They want to be able to be on top of their finances. They want to pick their providers. And I think that legislation sometimes has been standing in the way. And now we say, well, we want to take off that load from this market and say, let's embrace digitalization, openness, transparency, etc. But I think it's going to be one of the most interesting times in history to be a banker, because you kind of for the first time you're going to get what you deserve. So with new technology like offering aggregation services, you can both be the central point for where your consumers engage with their finances, but you also be able to target and kind of cherry pick the guys that I have a great offer for you and for you, and kind of unlocking this retail market.
Mm-hmm. But obviously for the incumbent banks, this is a bit of a threat as well. How do you think that they can best prepare themselves for this new environment?
So we meet a lot of banks. I think that there's two kind of standard reactions to this. The ones who feel, I might be a winner. I have great products and I think I deserve more customers. Then technologies such as what we provide, like aggregation and payment initiation, is a great tool for unlocking that market. And they don't care too much about the legislation. The legislation for them is something that points the way for the future. And they understand that this is only the first step. This is only payment accounts, but there's so much more. But they're doing more aggressive. They look at what will customers want and how can I now refine my offering. So that's one way of looking at it. I think the other way is more like, what do legislators need from me? What do I need to bring to the market? And what is the bare minimum of new technology that my customers will force me to build? And I think that's really going to be like so much more successful, obviously. And I think it's going to be more where now all incumbents are kind of having the same position. I think when we have more transparency, more competition into this market, we're going to have big winners, and we're going to, of course, have big losers as well.
Okay, and I know that you're also partnering with some other fintechs, let's say Klarna, which someone would consider to be a competitive. How do you go about those partnerships, and what do you hope to gain from them?
I've read those articles as well, and I think that we've entered a new era where you can't lock in customers anymore. It's about deserving every customer interaction. And we might have an overlap at some point with a Klarna offering or a Nordea offering or any of our partners offering. For us, we wanna collaborate. We wanna power those services so they can bring like financial happiness to their customers. So it's not about competing. I think it's about doing what's best for the customer in the future.
Okay. And my last question is really around funding. So I know you've gone through a recent round of funding with some pretty major European banks. What would be your advice to other fintechs that are going through that kind of fundraising round as well?
If you can be picky and spend time with the potential investors, make sure that the interests are aligned. Don't just take that stupid money and run, but see that your interests are aligned, and also be open when they aren't, and discuss how can we bridge this, etc. I think that has been extremely important to us. Mainly, or maybe the most important thing is that we've also spent a lot of time with those executives to make sure that we're going to spend a lot of time together, that we like each other, we share the same vision of where this market is going.
Excellent. Thank you so much for your time, Daniel.
Thank you.